Here to discuss this massive volatility in the FX market today. Dan Tobon is head of G10 FX strategy over at Citi. Hey, Dan, what is currently in the market when you look at dollar MEX and the loonie?
Yeah, well, obviously a lot of concerns about tariffs, but FX is a pretty efficient market, and I think what's most surprising is that we pretty much have gotten to a fair value for Dollar-CAD based on these tariffs. So we had actually been saying last week, look, if these tariffs do get implemented, we should see Dollar-CAD up towards 147. That becomes a new equilibrium, and we should probably trade around there. Well, sure enough, the weekend opened up after the tariff announcements. We went right up to 147, and we've kind of been chopping around there. So that looks pretty fair. I think it's safe to say that tariffs are decently priced in at this point. The difficulty now is, are they going to stay on or not? We got the news about Mexico, and we saw this sharp reaction. Everyone's waiting. We're all watching our Bloomberg terminals on the news feed, waiting for that red headline as to how the call with Trudeau and Trump went, as that's going to give us the next leg in Dollar-CAD one way or the other.
Yeah. We like the plug, Dan. Thank you very much. And then to that point, what's the spread there? So if we're at your kind of base case fair value, what's the spread to the up and the downside based on these headlines?
Yeah, the risk is still for a stronger dollar for a couple of reasons. The first one is just that this is the beginning, not the end of these trade negotiations and potential for tariffs. As you were showing just a bit earlier, right, there's still potential for bigger tariffs on China, broader tariffs as well. And we're still looking at this April 1 deadline for when we can actually be getting a lot more of these to come. The other thing, too, is the U.S. is still in a good spot in terms of economic growth, and Q1 tends to be good for U.S. labor market data. So that's also going to be another factor that continues to support the dollar, not to mention it still remains a relatively attractive currency from a carry perspective. So you still have all of these positive dollar dynamics where even if we do get a pullback, maybe 2 to 3% on a most extreme scenario, you still want to be buying dollars on those kinds of dips, at least for the next 2 quarters while we're still going through these trade dynamics.
I am curious. I mean, it's interesting you brought up the carry trade, because when you look at some of the moves in FX, I mean, you kind of have to go back to that blow up that we had in August, primarily because of the carry trade. And it wasn't just yen, dollar yen, but of course, a lot of people were using the peso as one end of that trade as well. I am curious as to, assuming the volatility tamps down a little bit, and I mean the volatility in Washington, not necessarily in the markets, that tamps down. Is there a case to be made to use the peso as part of that trade?
Yeah, well, first I would say the market volatility and the DC volatility are probably pretty connected here. So I think for market volatility to tamp down, you kind of need some of that dynamic to tamp down on the other side. I think investors are a little bit more cautious here. I think you want to see a little bit more certainty that we're through the worst of it before you really start seeing carry trades from that perspective come back. If anything, you've kind of been seeing a rotation more towards places like Brazil over Mexico while this has been going on. At the end of the day, it's really about what risk markets do and what volatility does, and it's hard to see this being a positive backdrop for risk markets, and it's more likely that volatility stays elevated. So I think it'll be some time. But at the same time, right, you can still own dollars against euro and against other currencies and actually be picking up carry, right? And so you're not getting as much carry as you do in EM, but you're also getting less volatility, and you're actually aligned in case you do get some risk-off moves.
We only have time for one last quick question, Daniel. I am curious here about the yuan and whether that matters in all of this.
Absolutely, it matters for sure. Right now, I think the most interesting thing has been how quiet the response has been on the China side. Now, a couple of things. One, it's the Lunar New Year, so it's just quieter in general. We do have this potential phone call in the next 24 hours between President Xi and President Trump. Yeah. And it sounds like the dialogue has been better, and certainly the language is less aggressive than it is maybe with Canada, for example. So I think there's a little bit of, I wouldn't say optimism, but more so in terms of the sequencing of where the risks are. Yeah. I think the market's kind of saying China might be something more of a Q2 issue, especially as we get past that April 1st deadline. So I think that's why it definitely matters without a doubt, but we're not seeing it leading the charge in terms of moves at the moment.